Right, let's go. Welcome. Thanks for joining me. And we're going to be talking about attributes of a good day trader, a successful day trader, and what makes a successful day trader. By all means, type in any questions, and if you want to turn the mic on and ask a question, or just join in the debate and share your ideas, that's fine. Just send me a message in the chat box, and I'll meet you. Okay, so I'm long this spiders market at the moment, and so the reason why I'm long this market, and one of the reasons why I'm successful, can pull money out of this market, is because I do adequate planning. So what you're looking at the moment is just a 3-hour chart. I do love chart patterns, and you can see how the S&Ps here at the moment are stuck in this apex. And so if whatever way we come out of this apex is potentially going to give us quite a nice move. So you can see one of the things that really gets me going today on the bull side is this volume. So this range here is the 2023 open range. You can see we broke up from it on monthly jobs on Friday the 6th. On the back of, so we were channeling, and then on January 6th, we saw a lot of volume, higher closes, closed outside the box, and we came back and retested it on the 10th, and then we've been winding up ever since. So at the moment, all these pullbacks are getting bought. So I'm buying dips in this market at the moment to see if we can break this high and go back to at least 4150. I think we can get to 4200, maybe even 4300 over time, not anytime soon. So that's what I've been doing on this one. I've just been buying dips, but you achieve that by having a specific trading style that suits you and doing adequate preparation and making sure that you're the right side of the current trend. I mean, if you look at the daily, that's a 3-hour chart. If you look at the daily, my daily chart is, you can see we're butting up against this 4,000 resistance. But if we could break through, I think we can come and see 4150 and 4300 on a move like that. I like the chart pattern in the daily, of course. If I like it in the 3-hour, I'm surely going to like it in the daily. I think this is a really nice sort of potential sort of cup and handle pattern. Or you could call it head and shoulders. We had a head and shoulders pattern here. This is potentially the right hand side of the shoulder, and we're literally on the neckline now. Just waiting to see if that neckline can punch up. Obviously, there's a lot of resistance here. We've sold from 4150 up here back end of December. But so the key attribute of a successful day trader is, for me, is that planning. The other attributes that make me successful is it's the back testing, it's the hard work. A lot of people come into trading thinking they can just follow somebody or they can just copy one strategy and so on. Well, that's all fine, but if you don't put the hard work in and haven't done the back testing, pulled up these charts and gone through lots and lots of charts and looked at the patterns that work well, then I don't think you'll succeed. I mean, that's why I succeeded. I succeeded in studying these markets. I'm looking for the sequence. That's one of the sort of key aspects of my trading style, is I'm looking for the sequence that this market can show. So the sequence in this market is, and we saw this big downdraft in the market from the 13th of December, bottoming pattern in the back end of this last year, and of course the start of this year. We've not gone an awful distance since non-farm payroll. I mean, non-farm payroll was only 38.70. We're only just under the 4,000 mark. So I think we've still got scope to get at least back up to these highs. So, yeah, it's about the developing a discipline by doing the training, back testing, be clear about what you expect the markets to do based on your experience. So if you're relatively new to trading, let's say, for example, you traded less than 12, 18 months, which in trading terms is not a long time. You can accelerate your learning and dramatically increase the probability of you winning trades by doing this kind of work. Now, this may not suit you. You may want to be, I've met some day traders who just want 10, 20 pips out of the market. I've met other day traders who only look for 50, 100 pips a day. And that's my style. I'm looking for at least 100 pips a day in these markets, not on the S&Ps, because the S&Ps are quite slow. I trade the Dow as well. Just happened to have decided to be a bit more cautious today and just picking up lows in this S&P. So what else do you need to do? You need to have patience. Discipline is the core thing. Patience. You need to stalk the markets and pick your spot. Also, a couple of other things you need. Don't over trade or under trade. Some people have problems pressing the button. Other people press the button too much and over trade. I traditionally have over traded too much. I've been there and done that, got the badge. I'm not some, none of us are born fantastic traders. None of us are born successful traders. It's about putting in that hard work and getting to that point where you are a confident trader, hitting a good, in my book, you've got to hit a good 60-65% success rate. You can make money out of the markets with a lower success rate, assuming you're good at either risk management or keeping your runners going. Bear with me one moment. So what else do you need to know? You also need to be mentally tough. Well, if you get a drawdown day, if you make a loss on a day, what does your trade plan tell you to do? How are you going to handle that? Some people, the early days, I've been there and done that. I've done revenge trading. I've lost a trade, thought it's not me, it's the market. If I just give it one more chance, if I just get back in there again, I can make my money back and more. And of course, if that's the kind of trading you're doing, you're going to quickly chip away at your account and give your money back. So that's another aspect of this. But the bottom line is you've got to have a trade plan. You've got to have a system that you can use every single day, do the same thing every day and expect the same results. And that's the key to my trading. I'm looking for the relationship of the markets to the gap. On the previous day, the Friday close. I'm looking for major support and resistance, and I'm using risk management so that I like to get trades to the point where they're a free trade as soon as possible, but I will just keep my stop out of trouble if I think I've potentially got a good runner. And the other aspect of this is, one of the other most important thing is, it depends on your trade plan, but for most people, and particularly me, I need runners. Everybody needs runners. If you don't get runners and top your account up when the markets are trending and they have got a lot of volume, then when the markets go sideways, you're stuffed and you're more likely to make mistakes if you're trying to make money out of a sideways market. So you need to understand by your own standards, by your own trade plan, to identify where you've got a breakout. So I've talked to you about this 3-hour charts in this apex. If we can get back up to the highs and break those highs, then I think we're going to 41.50, and like I said, potentially climb back up to these 13th December highs. If we fall out of here, I need to flip this trade, and that's another aspect of a key aspect of a successful trade. If you get the direction of a day trade wrong, there are certain circumstances where I will flip it. It's actually unusual these days. I can't remember the last time I've actually flipped a trade and went, maybe I was going long and then decided to go short. It's very, very rare I do that, but that is a good positive trait if you've got the right mechanism and the right measures to allow you to do that. So that's another aspect of this. Let's just look at this, what this market's done today. Let's have a look at how the S&Ps are behaving today. So the 10-minute chart, a couple of key pivot support and resistance there. So 39.92 and 4,000 are crucial pivots to me. Flipping a trade is when perhaps you start off buying dips in the market, and then perhaps support is broken and the trade starts to run to the downside, so you flip it to go on the short side, so you start shorting, so you change the direction of your trades. That's what I'm trying to say. And here this is turning out to be quite a choppy day at the moment. This is the European session. In the European session, this broke up to 40,020 very quickly. So we did a quick 1-2 back to base, and now we're trying to pick up on this support. We're trying to hold this area here, this 39.92, and get back above 4,000, but it's pretty pathetic. And the volume, the most important thing at the moment is the volume is beginning to build, but it's staying quite low. I need that to get back above 40,000. If we get back above the 4,000 and the volume picks up, then I think it's worth buying the dips and potentially buy that in the last hour of the day. All right, but what I've essentially got here is the open range. So let's just identify. Let me get the tool and just draw the open range for you. Here is the, right, this is the open high was 4,005, and the open low was right back down there, that 39.92. So we've come out of that range, but we have gone back in it again. So I still qualify this as a bullish market. All the time we stay in there, if the volume picks up and we stay in there, then I think these dips are definitely buyable. And if at any stage, particularly in the second half of the session, we get above 4,005, which is not a big ask, it's quite a tight range today, I would hold that into the close if we get above that mark here. So you can see when we did drop, all we did was come into the pre-open support. So that's the reason why I'm still bullish, because if the pre-open support can hold and the open low can hold, which it is at the moment, all we need to do is buy dips and see if that level can hold, and that level, and if we can close above that level. Okay, so it's potentially a 1, 2, 3 wave move. If it is a 3-wave move, I would expect the third wave to be double the first wave. So the first wave is, let's have a look. We went up to 40.20. So we are roughly 30. Wow, it's really small stuff today. About, let me see, 35 pips. So if that is the range of the first move, if we break and hold that 405, I would expect at the end of the day, I'd expect us to go to 4,050. Yeah, that's my target. Okay, so if that holds, if we break and hold the 17, 12, or the 40, 20 mark, then I'd expect, I've done that a little bit too high. Let me just push that down. Then I'd expect that to go to 40.50. Yeah, look at that. It's bang on 40.50 on the high. Okay, so that's a huge element. That's how I measure the markets. That's how I look for that. Now, in terms of flipping, just to answer that question a bit more detail, if we break down here and start closing underneath this 39.90, if the volume picks up on that, then I would flip it and change direction. I would start shorting and see if we can get down to 39.50. But in the meantime, that is holding the European or the pre-open support is holding, and I'd expect that to pick up. I'm also long the Dow. Let me make sure I'm still in that trade. I don't think I've been stopped out, have I? Yeah, I'm not gone in a little bit too high. No, I'm happy with that trade. What did I get in on? I'll just go to the Dow in a minute. I got in at about 9.35. Let's look at the Dow, because that Dow's behaving very differently today. I bought the Dow because there's main pivot support down there, and I'll talk about that in a minute. So the main open first 10-minute range was very bearish. So we had a high of 34,270, a low of 34,160. That's a fairly typical range. We broke, thing to note here is we broke the low of that range quite early on. We broke the low here. We came back to the midline resistance. So we got 1, 2, 3. After that three-wave move, I've bought this low here. I'm about break even, maybe slightly in profit. I've bought down here. The volume is picking up. I'm just looking to see if we can at least go back and potentially go to 534,300. So I'm bullish these markets and buying dips. And I'll show you why I bought the low in the Dow. We go to the 3-hour chart. The reason why I bought that low is because there's huge support. If you look at this big, come on. See, I think there's huge support there. If you look at this big bar here, so we came up from there on reasonable volume. Seeing as this is effectively the first day of the week for the US, because it was Martin Luther King Day yesterday. It was a bank holiday in the US yesterday. So this, as far as I'm concerned, this market is reconnecting with this Friday support. That's why I bought the lows, because if that Friday support holds and we close higher, again, as with the S&Ps, I think we can come and find 3,500, 35,000. I don't think we're going to do 35,000 today, but I think we might do that as we get towards the end of the week, maybe possibly into the end of the week. Okay, so that's two different styles of trading within the US indices. So the S&P did a relatively shallow pullback. This one's done a much deeper pullback. And the open high, yeah, so we've done 270, now the 370 drop on this one. But the Dow is much more volatile than the S&Ps, which is why if you're haven't got a lot of experience in the US indices, assuming you want to trade the US indices, I would suggest you start on the S&Ps. the volatility is a lot less. You're going to need bigger stop. The actual fact, you're going to need a bigger account to trade the Dow because of the margin restrictions on the Dow. So a quick look at the oil. Any questions? Let's open up for questions now. Let's have a look at the oil open. Now, if you want to join me in my trading room, then and pick up this kind of money that we are making. Actually, I've not done screenshots of my trades recently. I must get back in that habit. So that's the open for the Dow, for the oil, sorry. We had a good start at the open. So the open bar is here. That one there. So a low of 80.66 and high of 80.97. So we picked up, broken underneath the open range, sold into the open range. So we've done a 1, 2, 3 wave at the moment. So that's gone into overnight support as well, European support. So if that can close above 80.26, I think that can go back up to the highs as well. So another aspect of yes, I am. I'm in the S&P's, the Dow low and the FTSE short. Lovely move into resistance on that FTSE in the last hour. So there's the daily in the FTSE. We have just about clung on. I was hoping that will close underneath 78.30 or ideally underneath 7,800. That's not done so. So it may be that my shorts are not going to survive, because if this breaks that high, then I think we're going to see 79.60 and possibly 8,000. But we're coming up on lower volume now. At the very least, I think we need a pullback. This short is not going to work to any great degree unless that closes underneath 76.90. I have traded the oil today, but I did short the highs, but I took it off and just concentrated on the indices in the end. Okay, so the trading, I run a live trading room. The trading room opens, well, at the moment I'm opening it before 2 o'clock to catch the oil moves, and closing it, running it for about an hour and 15, hour and 30 minutes. And then I am just going to a live trading room alert room on the Telegram app. So there's an investor room, investor or stock trading room, and then there's a separate live trading room where I set up alerts for what I'm doing in that. The time frame I use for the FTSE is I drill right down from the weekly to the daily, and then the 4 hour and the 1 hour, etc. So I use a range of, I've got 6 charts for any one trade. I would look across 6 charts to look at the confluence of support and resistance on 6 charts. I pulled up a 3 hour chart because I only use this. The 3 hour chart's like my sketch pad. That's where I am just marking out support and resistance. This is the FTSE on a 3 hour chart. So we've got all this resistance up here on the FTSE. If that falls out underneath there, if that breaks that low, then I think this can come down quite hard. If you look at the weekly chart, a huge amount of resistance up there in the weekly chart from May 18. So you can see what a slow market this is. So you can see why it's important. If my shorts are going to work, we need to stay under that 7,800 and of course close lower. So I'm looking at this to be a three-wave corrective wave, and now potentially start a whole new trend, which I believe it's going to be a downtrend. But I will flip it if I am proved wrong. Okay, I've been talking for 25 minutes, so let's go back to the S&Ps and see what that 10 minutes doing. But yeah, but in the trade room, you will. I don't use a 10-minute chart. I don't use a 3-hour chart to actually take live trades from, but they're good for demonstration purposes. And I'm giving you the essence of my trade plan, my day trade plan in these time frames, so you can get a good idea about what I'm doing. All right, the trading room is good fun. We make good money. We don't have huge targets in the trading room. We have small targets, but I do suggest bigger targets on pullbacks. As day traders, we don't want to spend a lot of time in front of the screens. So we'll take our daily profits out of the markets. We're using a lot of leverage on small moves. That's why we can make a day's money inside normally 90 minutes. And then if I do get back into a trade for a bigger move, I go back in smaller size and just leave it, just walk away from it. So that's the S&P potentially holding up. Volume is increasing down here. So there is a suggestion that could pick up. If you look at the Dow on the same time frame, you'll see the Dow is now building off of that key support. So if we hold this trade pattern, then I will hold that into the close and look for that to get back up to the open highs. All right. So if at any stage you want to have a chat about the trade room, find out more information, then drop me a line. The information is here. I'll just pass it across to you. This talks about the modules in the program and what we do in the program and what we do in the trading room. So if you scroll down, you'll get more details about what's included and what strategies we use. And so that's what I'm up to. At the moment, this Dow is very uninspiring. So, but if we do see a continuation in volume, then I will hang on to that. Pretty soon, if we can get above 34K, I will push my stop up, so my risk is reduced. All right. Well, thanks a lot for joining me. I hope you enjoyed that. So the markets are okay in this early stage of 2023. We've got on the data front, we've had Chinese GDP and Goldman's earnings today. Goldman earnings were disappointing. So what is it? Tomorrow we've got UK inflation. So I think that's going to be key. That's why I've shorted the FTSE, looking to see if the inflation number could knock the FTSE off these highs and drag it down. At the moment, that is working. I'm in profit on the FTSE, and I will continue to short highs in that one. In the meantime, this Dow and the S&Ps are beginning to look better. Let's just go back to that 3-hour chart before I go. Yeah. So if we get a higher close on that, off of that Friday support, then I will look to see if that can go to those highs. Right, so I'm literally only about 20 pips in profit on this Dow at the moment, and only a few pips in profit on the S&P. So it's a very slow day at the moment. Apart from the fact I have shorted the oil highs, and I'm short with the UK. So it's been the FTSE trade was close to today's high. I'm short from about 70, 75, 78, 75. So it did breach that high by a little bit. So I took a little bit of heat, but not much. If you're not in the short, the FTSE, and you want to get in it, I would definitely wait for any highs tomorrow. Let's see if we can, you never know, you might even break this support's working at the moment. If you want to get short this FTSE, I would try. Excuse me, I just sneezed, sorry. I would wait and see if you get an opportunity to short higher. There is a lot of volume coming on this FTSE into the close today. So if these US indices hold up, and this FTSE is not able to crack underneath this low, then maybe I'll pull out. Every time I short the FTSE, but my first short is always half size. I don't go in full size. If it starts to work, then I'll just add on any pullback. If this breaks down, I'll be shorting any subsequent highs and hoping for that to wind right back. All right, any other questions? Okay, let's have a quick look at the gold before we go. Yeah, I'm looking for gold to come under 1900 for a pullback. We had a big breakup on Friday. So if we can get that to pull back to anything under 1900, then I will start to get back into that. Brilliant. Thanks a lot, and have a good evening, and watch out for next Tuesday's event. TGA, okay. There's something you're in now, Andy. You bought TGA, let's have a look. Right. This is the US, no, Thangarella, sorry. You told me what it was, didn't you? South Africa, I've only got South Africa. Let me put you bought it on the London market. UK, yeah, okay. So, there it is, got it. Ooh, right. What business are they in? Have I got the right one? Mining, okay. Let's get the daily chart up. I've looked at this before, haven't I? I've got this marked up, so I've looked at this at some stage. You bought 1140, right? Let's see what this looks like. Let me mark up the right. So that is the beginning of the year. That is beginning of last year. Wow, so this has been on a big run. So this is right. So we appear to have broken up from about 340. So we've got key support underneath us at these lows. Closed lower today, so the jury is out on this. at the moment. But I can see why you like it, because there's a lot of, it's had a good run and that's a lot of support. So if that's, we've got trendline support just underneath us, if we can subsequently close above that 1273, then I think that might be able to do something. That is definitely going on my watch list. Yeah, so we were back down here in August last year. And when we were back down here in August, that went on a decent run to 1850. Brilliant. Thanks for sharing that. Right. I'm off. Thank you very much for joining me. And like I said, watch out for the Monday night sessions and these regular Tuesday day trading sessions. Thanks a lot. Big divvy player. Okay, brilliant. Thanks a lot. Bye.